So this past week in the stock market marks the worst week since the great financial crisis back in 2008. And if we take a look at the S&P 500 here, you can see the magnitude of this sell-off. It's insane. This is what I call a flash crash. Take a look at this 20-day, 1-hour chart. Literally 10 calendar days ago, not 10 trading days, 10 calendar days ago, on the 19th of February into the 20th of February, the S&P was coasting at these all-time highs, nearly $3,400. Now, fast forward 10 days later, we shed 15% off of the S&P 500, which is insane because if you all remember back in 2018, this previous correction we had in the stock market, it took us not 10 calendar days to sell off. It took us about a month and a half of calendar days to sell off. You can see here, the 1st of October is where we took that cliff dive, and it didn't stop till about the 17th to the 20th of December. So about, honestly, more than a month and a half, about almost 2 months that this sell-off took, and that goes to show how quick the market this go around is selling off. It's a lot more panic, in my opinion, and rightfully so, because the CV, it's causing global impact, it's affecting businesses, it's going to affect Q1 earnings, so that's why I think it's selling off a lot more rapidly, because this has a massive effect on the stock market, and it's a health concern, so it's pushing a lot of fear into people. So back in 2018, that sell-off was a bit less fear-induced, I would say. This one is a lot more fear-induced, which is why we're seeing this massive sell-off. So now that we got that quick little 1-2 minute update on the markets right now, let's go to my M1 Finance portfolio so I can show you all how much money I've lost over the past 10 days and what are my plans in terms of maybe buying some more stocks, maybe selling stocks. Let's just hop right into it, into the M1 Finance portfolio, and we'll go over that right now. So the previous update video, I know it was about a week ago, so I'm not going to go too in-depth on the individual holdings here, but you guys saw in my previous video, I was up like 10-15% on the portfolio. My capital gain was in the green, right? But now, this go around, since July 2nd, 2019, when I started the portfolio, with this massive sell-off in the market, my total return is now 16% in the red. I've lost $128.36 when it comes to capital gains, but my dividends are still nice, up $18. And that's kind of the beautiful thing of a dividend-oriented portfolio, which this portfolio is mostly dividend-oriented, right? Even when stocks are going down, you're still, for the most part, unless the company cuts its dividend, which would be bad, but you're still, for the most part, getting those dividends pretty consistently, whether it's monthly, whether it's quarterly, whether it's annually, semi-annually, depending on whatever stock or ETF that you own. So all time, that's what we're dealing with, 16% in the red. Now let's go and see what happened in this past week, because you can see this past week is honestly where a lot of the carnage came from. This past week, 11% in the red. I lost $275. Well, it's not a realized loss, guys. This is what you have to understand. It's an unrealized loss, meaning I didn't sell out, so I didn't realize the loss, but it's just there on paper, right? That's kind of, the dollar amount that my account went down over this past week. So what am I doing? I'm a strong advocate of buying into the stock market during weakness, especially if it's a long-term portfolio. It's a bit different if you're swing trading or whatever, but if you have a long-term portfolio that you know you're holding these stocks, ETFs, for at least 5-10 years, I think any 15%, 20% sell-off it's wise to at least consider buying into it. It's not, in my opinion, a time to panic and sell everything, but it's time to do the opposite, in my opinion, right? Buy some stocks, some ETFs, some REITs that have been getting squashed. So you all can see, if we go over here to my activity tab, over the past couple of days, I've actually deposited around $756.93 to be exact here into this portfolio. Back on the 27th, which was literally just 2 days ago, this is really when the markets were getting squashed, I wanted to buy some stocks again because I'm buying into this weakness. So what did I buy? I bought here a fresh position in Microsoft, ticker symbol MSFT. This is one that I love long term, and quite honestly, I've been wanting to get it in this portfolio. So right now is my opportunity, I think, at least, right? I bought a little bit more of Altria, $40 worth, 3M, which has been holding up quite well, believe it or not, during this whole CV scare. I bought $50 worth of them. DGRO, ticker symbol DGRO, that dividend growth ETF. I bought $75 worth of this one to really up my position in it because I do want it to be 10% of my portfolio. And I ended up buying more SPHD, $60 worth, which is actually the biggest holding in this portfolio right now. And this is a low volatility, high dividend yield ETF that pays monthly. And generally speaking, this ETF is less volatile than the market. So the fact that the market, it's really rocky, volatile at this point, I think it's wise, at least for me here. Again, this is all my portfolio, my opinion. For me, I think it's a good idea to buy into some SPHD right now. You're getting that yield because let's be honest, who wants to buy bonds? At least I'm not buying bonds, but bonds yielding 1.2%, 1.3, 1.5. You're better off, in my opinion, at least just buying a dividend yielding ETF, a nice dividend stock like Johnson & Johnson, for example, or whatever, over buying a bond. That's just my personal opinion, especially if you are a younger person and let's say in your 20s or your 30s. So this upcoming week is where a lot more buying is going to be going down. You all can see here I have $501.13 sitting in cash. That is from another $500 deposit that I put into the portfolio and $1.13 here from my beautiful old dividend from SPHD. So this $500, let me show you all my pending buys here. This $500 is going to be split amongst these 7 companies. Well, at this point, I only have $375 worth of buy orders, but we'll see. Maybe Tuesday I'll use that other $125, or maybe even Monday. We'll see. But as of right now, this is what I'm going to be buying this upcoming Monday. Johnson & Johnson, $50 worth of Johnson & Johnson. They actually got crushed on Friday, down about 5-6%. They rebounded heading into the close like a bunch of other stocks did, but I still want to nibble some more of Johnson & Johnson here in the weakness that we are experiencing. The next one that I want to buy, that I am going to buy, is Realty Income, ticker symbol O, $50 worth of Realty Income. This one, let me show you guys the chart. This one also got crushed. If we take a look here on the 20-day 1-hour chart, it's gone from $84 down to about $69. It closed at around $72 on Friday. So for me, there's some value here. The dividend yield, since the price dropped aggressively, the dividend yield went up. So I figured, why not average down a little bit on ticker symbol O here. The next one is going to be gold. We saw gold fall about 3-4% on Friday. So I figured, let me buy a little bit of gold here. $25 of, not gold itself, but it's an ETF that tracks gold, which is GLD. So this is more of a hedge. I'm not getting dividends from this. this, but it's just really a hedge against the overall stock market. So $75, my next buy here goes to Disney. And before you guys comment, I know, I'm fully aware that if the CV gets into the United States, God forbid, I hope it does not, but if if it spreads, I mean, in the United States, Disney will probably get crushed, especially if they close their parks. If they close their parks, this stock, it might go down to $100. It may go down to $105, $110, maybe back into the 90s. I'm fully aware of that, right? And I have more cash ready to go to buy Disney because I just love this company long term, guys. This is a company that I can hold for life comfortably, at least for me, right? So Disney, $75 there. Boeing, ticker symbol BA, $50 going there. If we take a look at their chart, they've been pummeled, guys, pummeled from 350 down to 260. Whoo, that's a 22% sell-off here in Boeing. That is absolutely insane. So my average cost on Boeing in this account is around $330, $320. So a nice $50 chunk there should bring that down to, let's say, $300 cost basis, which would be awesome. Microsoft here, $75. You all saw a couple minutes ago, I bought about $30 on Thursday or Friday, whatever. I want to buy a little bit more here to build it into around 6 to 7% of my portfolio, because when I'm looking at tech, Microsoft is the winner in my eyes because they have their hands in so many different businesses. They got hardware, software, cloud, of course, Microsoft Azure. This thing is growing like a weed. I want my hands in Microsoft, right? I think it's a more diversified business than, let's say, Apple, right? Because Apple is heavily reliant on the iPhone. But let's see, in 5 years, I know Apple's growing their service business as well. Who knows? Maybe they'll get more, balanced over these next couple of years. McDonald's, I want to buy $50 worth of McDonald's here heading into Monday, and this is more of, obviously a blue chip company, as many of these are here, and this is one that, it's not the most glamorous holding, but it's one that stood the test of time. It did well in the previous recession. I don't have too much money in McDonald's as it is, only about $100. My average share price is around $196, so why not? I'll buy a little bit more here in the low to mid 190s to level out my cost basis. So that's really it in terms of what I'm buying this week in M1 Finance. And again, I have more cash ready to go. Let's say this market tanks on Monday, it maybe settles out on Tuesday, and it tanks again on Wednesday. I'm planning on putting more money into it and I'm planning on continuing buying this dip because, again, guys, I'm not worried about the short term when it comes to this portfolio. I'm looking to build this thing over time and really reap the rewards of the dividends, the cash flow, and hopefully the price appreciation of all of these businesses over time. And sure, not every one of these businesses is going to thrive perfectly over the next 10, 15 years. Maybe one of these does poorly. Maybe 2, 3 of these fail. But the whole goal is, if I pick the majority of these rights, or, if I do well in terms of the majority of these stocks, my portfolio will, of course, come out on top. So let me know, what are your thoughts on M1 Finance in general? What are your thoughts on the stock market in general? What are your thoughts on my portfolio? Are you buying anything right now? Are you selling anything? I would love to know down below in the comments section. And if you guys actually want to use M1 Finance, this is what I use personally, as you can see here, for one of my long-term portfolios. I have an affiliate link down below. You get $10 by, I think, just depositing or opening the account and starting it with a deposit. You get $10 free. It's not anything crazy, but hey, it's $10. And this is really the time, in my opinion, if you haven't started investing yet. I'm not a financial advisor. You don't have to do anything I say here, of course, but this is the time in the weakness to start investing, if you haven't done so already. That's how I view it here. So hope you all, again, enjoyed the video. I'll catch you all in the next one. Peace out.